Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola, and Malaysian palm oil.
Hello and welcome. Now, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on my charts. This was all my own original work, as I think you deserve to have that. So with that, Paris Rapeseed. We've had two patterns here, two completed patterns that have been the main influence on this market since as far back as the summer. First pattern is an overextension of the bright red neckline, which is currently at 452.5, the May to August 2025 head and shoulders continuation pattern. This bright red neckline also shows up in the second pattern. Now in this case it acts as a lower trend line, together with the nearby green upper trend line, it's currently at 455.5, that together form a shallow July to October descending wedge pattern. Now we had a break higher over this pattern 8 weeks ago, a good break higher, and as I said back then, and I quote, "I feel obliged to lay out, if not targets yet, then potentials, thus a primary potential will be up to the 489.75 area, with a secondary harder to reach potential up in the 502 even area. Of course, if this becomes a false break on the upside, then I will retire these potentials in a heartbeat," end of quote. 5 weeks ago, I solidified those potentials into targets with target X, the primary one, at 489.75 and target X1, the secondary one, up at 502 even. However, we have not seen a continuation of the move higher since mid-November, and that heartbeat moment has come when I recognize it has been a false break and I will retire the topside targets after this commentary. Since last week, we have seen prices push down below the weak pink February 24 today uptrend, which is currently at 467.5, for yet another time, enough that I'm now considering retiring that one as well completely. This leads me to comments from 2 weeks ago when I said, and I quote, "I'll start looking at the late October to late November action as a possible double top, with potentials, not targets yet, of a primary potential down in the 470 even zone, which the market has already achieved, and a secondary harder to reach potential down in the 464.5 zone," end of quote. We already reached the primary potential, and last week I formalized the secondary potential below into a secondary target X3 just above the 2013 high at 464.25. Well, on Tuesday this week, prices reached down and through target X3 down to the congestion and low of very early October at the 460.5 area, where we are today. Interestingly, yesterday was the lowest close since March, and today is the lowest low since March also. In this, we are on the verge of a pretty clear zone below, down to at least the 456 small Winnipeg Canola. The key recent pattern here had been the fairly obvious bright red late June to late October bear channel. 11 weeks ago, the prices spiked down to the May 23 low at 611.10 within this bright red bear channel, but then bounced up from there. Initially not by far, as it seemed the pattern came to the market rather than the market moving to the pattern. But it did lead to prices testing and finally breaking upwards 7 weeks ago over the bright red upper bear channel line, as well as pushing up over the 2021 low at 629.5, plus the lesser Fibonacci line at 632.90, and then challenging and stabilizing over the bright green short medium moving average, which is currently at 638.60, before 4 weeks ago making a small gapping move higher, since filled in, over the significant combination of the June 21 low at 655.90 and the 50% Fibonacci line for 2025 at 655.70. Prices continued higher, but then, unsurprisingly, ran into trouble around the slowly declining mauve medium moving average, currently 647.10, and the extraordinary flatlining gold long moving average. And that's currently at 661.20. Now, further above is what may be in some ways the additional cause to this halt, the significant April to August head and shoulders top neckline, which is currently at 682.5. To this halt, we have also the significant April to August head and shoulders neckline, which is currently at 682.5. Thus, we ended up and out of the bear channel, and we almost, though not quite, seem to start to form a small October to date bull channel. However, the bullishness faded under the capping pressure of the mauve medium and gold long moving averages, plus that 50% Fibonacci line for 2025 at 655.70. And 2 weeks ago, prices turned lower for small November and early December base double top, with the market subsequently crashing down through all the previously mentioned resistances that became supports and are now back to resistances again. In the process, the primary target for the small double top of 641.40 was reached, as this was the harder to reach secondary target, as was the harder to reach secondary target down at 630 even. So where does that leave us now? Well, we had a small band of recent congestion over September to October between approximately 616 to 633, a band we sliced down through, and it raises the question as to, well, as I said last week, whether this is a bearish halfway hesitation with potential down to even the 585 level. Thus this actually would be below the 50% absolute Fibonacci line at 606.90, and that would be one to watch. End of quote. Now, in truth, I favored the basing action here last week, but it looks like the 50% absolute Fibonacci line is not going to stop the decline, in which case we could next be looking at congestion at 575. It all depends now on if the 606.90 50% absolute Fibonacci line can hold. Bursa Malaysia crude palm oil. To start with, as I've done here for many months now, I'd like to look at the wide congestion area that's overhead between 44.08 to 45.59. We tried in mid-October to pierce it and failed, with prices punching down through the lower edge of this congestion as well as most of the moving averages, which we are still sliding along underneath. More on those, some of them later. Prices also dropped down through a wide congestion zone made up from the 38.2% Fibonacci line of the May 20 to March 22 move and the 50% Fibonacci line of the May 23 to December 24 move, both at the same 42.74 level, along with the 38.2% Fibonacci line of the July 19 to March 22 move at 42.39, and finally the July 23 high of 41.89. These became resistances. The recent overall pattern here is still the dark blue mid-August to early October bearish Andrews pitchfork. And we have seen action in recent weeks in between the dark blue lower time below, which is currently at 38.54, and the dark blue middle time above, which is currently at 40.49. This pitchfork has been, in recent times, been exceptional in December and we saw testing the overhead dark blue middle time without much result, actually. Stepping back a bit though, to view the overall picture, I said 4 weeks ago we can look at the whole August to date action as a possible double top or even a triple top. Now, if that is the case, then as I said 3 weeks ago, which is now 7 weeks ago, and I quote, we have potential still available down to the primary target X in the 41.18 zone, and a secondary, harder to reach target X1 down in the 39.40 zone. And that's the end of that quote. The primary potential and target was achieved some while back, and the secondary, harder to achieve potential and target X1 was reached this week. Last week, I mentioned the small bright green diamond pattern formed between early November to early December, which we exited out of on the downside last week. This has a primary potential target X2 down in the 39.20 zone. just under the earlier target X1, and a secondary harder to reach target X3 down in the 38.10 zone. Midweek this week, the market dipped down to 39.26, so close enough to the 39.20 zone for me to call it reached. Though for now, I'll still leave it on the daily chart. Now, 5 weeks ago I said, and I quote, "We do have a band of congestion below, around the dark blue lower time, between the February 2011 high at 39.53 and the lesser Fibonacci line of 40.26. However, to be honest, this is not that powerful a congestion, but it in the case as we have seen this week, but please just be prepared that below this congestion we don't have that much support until we get down to the dark blue lower time, which is currently at 38.54, and the interesting and close by bright red neckline extension currently 38.41 of the late April to late May small reverse head and shoulders bottom. Now, there is one further feature which I would like to discuss, something I've already mentioned since June. This all came about because I was at the end of June speaking about it in a presentation at the Biofuels International Conference and Expo in Brussels, Belgium, and more recently in November at the 28th World Ethanol and Biofuels Conference in Brussels as well. It was and is to watch out for a key level, and that key level is 35.99, and that's from now until the end of the year, so it's not that far away. I always preface this by saying, and I quote, "I know it's quite a way below the market, but still nevertheless it is important," end of quote. Well, we are a lot closer to that level highlighted in dark on my daily chart in a black line box than we were in mid-October, and that is why it is important. You see, if prices push down below 35.99 before the end of this year, which I admit seems far away, well, not so far away now, then we would have set up the conditions here in palm oil to make that rarest of patterns an annual key reversal with all the implications such a huge long-term pattern may bring. Please watch out for this, as it is important, and I will bring you more details should we get down near or below this. This is an important level, even though I know as we are today still a few hundred ringgits above it. Just please bear it in mind as we still have some time left before the end of the year.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.